and we are going to bring you into a new chapter of trading, right? And I say new chapter because the old chapter is done. At the end of the day, guys, all trading 101, there's nothing more you can possibly learn. So what we're going to do here is we're going to what we call trading 102, right? And trading 102 course is the basics of everything, right? So what I did after, trading 15 years, the last 5 years in crypto has been pretty crazy because it's been dealing with new people learning the trade, and then a mountain and thousands of trading gurus that actually know nothing. All they did was go watch a bunch of videos that you didn't have time to watch, and then they repeated and threw up the same information on you that everybody's had. It basically comes down to they've support resistance, and then there's the Fibonacci, and then after that there was the Elliott waves, and then there became order blocks. But at the end of the day, and then they said, well, the reason you fail is because you don't know candles, and a hammer candle, a doji candle. And then when that failed, they said to you, well, you don't know patterns. You got to look for a bull flag, a bull pattern, a bearish flag. You got to look for head and shoulders. You got to look for a cup. So it's just been a lot of regurgitated stuff thrown up on you. And everyone at this point in Trading 101 knows that it's about support and resistance, and your job is to buy low, sell high. So what we're going to do here is actually do the trading course, Trading 102, right? It's my course. I'm VC. VC's course is called VC Trading 102, okay? And what this is going to be here, man, is very simple. I'm going to take all the information that you guys have understood, you can find anywhere on the internet, anytime you go do some research on how to trade, and I'm going to show you the most important part of this. Is not about all the information that you have, but it's all the same information. And to understand why, with everyone saying the same exact thing and showing you the same exact thing, why does 93% of the people still fail at day trading? And the reason is very simple. It's execution, okay? I'm from Chicago, so we know a guy named Phil Jackson. And Phil Jackson came to the Bulls, and he created this. Well, he didn't create. He used an offense called the triangle, which had been around the NBA for years, decades. And he took that same offense that anyone could have used, and he implemented it in Chicago. And at the end of the day, he won 6 titles. And you could say, well, he had Michael Jordan. He then went to LA and won another 5 titles. And you say, well, he had Kobe and Shaq. Well, Shaq left in 2009, 2010. He kept winning with a whole different team, just Kobe. So the man walked away with 11 titles using an offense that any coach in the NBA could have used. But the difference between Phil Jackson and every other coach was it wasn't the information, it wasn't the offense. He simply knew how to execute the information that everybody had. And this is why you're failing. It's because you do not know how to execute and get rid of all the BS and the noise, and only do what's important. Only use the offense and use what's important in the offense to be successful. So that is what VC Trading 102 is all about. Trading 102 is teaching you to take all the information that's out there and understand how to actually use it properly and when it's valuable and not valuable. So let's go through these concepts real quick so I can kind of explain to you pretty quick. So this is a introduction to the course, right? So this is something you can watch. It's going to be a 15-minute video just to simply explain a course that will be for sale and a course that you can take. But I don't want you to take something if you don't understand it. So I'm going to show you real quickly the inside of the guts of the program and the course that you're going to take. And if it doesn't make sense to you, then this isn't something for you. But I want you to understand that this is something, if it clicks in your mind and you see something and go, oh shit, that makes sense, then this is probably something for you, but it's not for everybody. So here's the simplicity. So there is a thing that we use, and our number one rule is volume is king, which I'll cover a little bit later. Volume just simply means, and volume is king because VC says so. If there's volume, something goes up. If there's no volume, it goes down. That's the basis. Rule number 2 is that there is a 3-move rule. 1, 2, 3, right? Like the cha-cha. 1, 2, 3, cha-cha, right? There's always going to be 3 moves. There's going to be a move, then a retrace of a move, and then the bigger move, right? Now this also comes down to the concept of Elliott waves. Elliott waves have wave 1, wave 2, wave 3. Now there are Elliott wave percentages that let you know when a good wave 2 is actually important, which means it pulls back 50% of the original first wave and 50 to 80%, and then the third wave is normally bigger. That's something that we'll cover in the course. You don't need to really dive into that. It's pretty simple. And then the realization that support and resistance, no matter how you look at it, is always going to be the same. It's going to be what we call a channel. And in that channel, everyone who trades, retail investors, are all going to trade a channel. A channel is simply when a trade goes sideways. Some people call it consolidation, some people call it a channel, some people call it a cluster, but no matter what happens is that when the trade starts to go sideways, this is where everyone starts to look at a trade, and then they're looking for confirmation, right? And this is exactly what they look for. When you get a trade that goes sideways, they put a support and resistance on the top and the bottom of the trade. And what they look for is very simple. They look for a trade to break above the resistance or break below the support, and then they look for it to retest. And then if it retests, they look for it to continue with the movement after that retest, which was the original breakout, right? Now keep in mind, this is a 1, 2, 3. The reason why the 1, 2, 3 move is our second rule is because this rule will stop you from jumping into a trade too early or getting into a trade that isn't in the right position for you, and knowing that once a trade breaks out, you don't FOMO in, you wait for the second move to pull back before you enter into the bigger trade, okay? Because you want to enter on the third move. That's why we have that rule implemented. And like I said, we will cover this 3-move option more closely inside of the course, but right now we're just showing you some simpleness, right? And I'll show you how this works. So as we come down here, normally time frames matter. This time frame, this cluster, this channel, or whatever you want to say, consolidation, is normally found on a 15-minute time frame. Then we move to a 1-minute time frame so that we can get closer in on the details, so that we can see where there are breakouts and where there's moves that happen, right? So what I'm going to do here is, you can see here, this is where we start to see the breakout here, right? And normally, based on whether you understand there's percentages and other moves in there, that'll allow you to kind of dig in a little deeper. But what we're looking for is a very simple thing. When you see a decent breakout, right, which would be where there's a candle that closes below the breakout and another candle, that is considered move number 1. On the Elliott wave system, it's considered wave 1. Now, we look for our second move back, which is when we see a good breakout like this. This is where we would normally put a entry on the whatever it broke. If it broke resistance, it'd be up top. If it broke support, it'd be on the bottom. And you would put your entry here at 65,000, and then you would expect it to come back and retest and then continue on with its downward movement, right? 1, 2, enter, 3. Right? If it doesn't come back and hit that, then you're not in a trade. If it does come back and hit it, then you're in a good entry, and then it basically continues on. And that is the simplicity of how to get into a basic trade in the system. It is support and resistance with a breakout. Now I'm going to go ahead and remove these real quick so that way I don't have to do it later when I'm doing another course. But let's go down here and find ourselves another channel that we see. And we see right here the coin or the trade starts to go sideways. So what do we have? Another support and resistance time. And all we do is track that until it does the same thing. And you can see right here, it breaks out of the resistance. This time it's breaking out on the upside. And then we look for it to retest, and we put our buy order on the retesting, which was the resistance area. As you can see right there, there's a little spot there that it comes back and it hits. That is actually where the entry would be put at 64,000, and then you can see that it tails up to the upside. So 1 move, 2 move, and there you go. The reason why this works the majority of the time is because no matter what crypto 101 you watch, or what trader you watch, charter, whoever you listen to, they have always told you that you need to see a breakout, you need to see the retest, and then you buy the retest, and that's your position. This is why the majority of the time this is a successful trade, is simply because majority of the time that is how 90% of retail investors actually trade, right? So you're trading with the momentum and the investors as they move forward, because this is what retail is. The good thing about crypto is that 90% of crypto is actually retail investors. So you're trading with the masses of people who are basically following the same steps and procedures and lessons that have been taught on YouTube and all these platforms over and over, and you guys are regurgitating the same exact information, so you all are trading the same way. Which brings me back to my question, why does 90% of you still lose? Well, we have that answer. We broke that code. So in the course in Trading 102, we actually explained to you and we solved the problem on why you fail, right? You don't need to be in the 90% of people that lose. You can be in the 90% of people that actually win by reversing it, right? But this is the basics of trading, right? There's a push, 1, 2, and then 3. Like I said, the rule number 2 is that there's 3 moves. The reason why that exists is so that you don't jump early, you always wait for a retest, and you always look for a greedy entry, right? And people say, well, greedy. Greedy is greediness on the entry. You want to get the best price possible. You don't want to be greedy on the way up, because that's the opposite of what you're supposed to do, and that's why it always backfires on you. Being greedy on the way up is actually 10 times more risky than getting a good entry. And we explain that in the course, how to actually get better entries and make more profits on the entry than on the trade itself. Right? And like I said, this is all mathematical. It's a course based on fundamentals, mathematics, equations, and what we call the market maker strategy, which is the best entry will always result in the best trades, right? That's just the way it is. So let's go over here and find another one here so that you can understand. So if this is clicking into you and you're saying, oh, I can understand this, then you might want to take the course that we're going to offer. If it isn't clicking for you, then you should never do trading, because this is the most easiest fundamental way to explain trading ever made or possible. And if you don't understand this, then you have no business risking any type of money in trading, because you will always fail, believe me. So here's another thing where we have a cluster, or where we have a consolidation. It goes sideways, right? And then you can see here, there's a massive breakout. Like, look at this. So normally this is considered kind of like a massive move. It's a power move, right? Now, most people will look at this trade when it explodes like that. Look at those green candles, right? And this is the 1 minute chart. Look how powerful these candles are, right? Most people would look at that and be like, oh my God, this thing's about to go crazy, because you see the power here. But what you don't understand, that these are just orders that are being placed at this particular time, which happen to trigger massive. So this could have been an institution, this could have been an exchange, this could have been all types of different people that are buying one time at this time just to buy, which causes this massive movement. It doesn't mean it's going to go crazy, but most of you would believe that this is going to go up. Now, if you follow the rules, which is when it breaks the resistance, you put a buy order on the retest of the resistance, and then you wait for the move to go up. Now notice during this time here, it never goes back and touches the actual breakout, the resistance, right? Now during that time, here's where your entry would be, right here, right? It never hits it, but it does make a third move up. You see how it pulls up here? Now the interesting thing here is that what happens is it creates a double top, right? So here's the top of the first one. And then you have the top of the second one, right? Where it hits support or resistance again right here. Now, when that's happening, if you're watching this trade and you have an entry point here, you have now missed that trade because you were following the rules of the retest. But you can see that it starts to consolidate again up here, right? Now, if you understand the rules of the 1, 2, 3 move, right? So here's how it works. If you understand Elliott waves, wave number 1 goes up, wave number 2 normally pulls back 50 to 80%, and then wave number 3, the third move, is always this. Should double top, or I'd say about 70% of the time it should be 30% to 50% bigger than the first move. So remember rule number 3, right? Rule number 3 we have is when we know what it's supposed to do and it doesn't do what it's supposed to do, then we know what it will do. So on this third move here, first of all, on the second move, it doesn't retest the resistance area it broke, so we're not even in this trade. But when it breaks up for the third time, notice that even though it had all this power in the very beginning, it didn't have it on the second move, and it created a basic double top. Then from that point on, it started to fail to break out. See how it created a new channel here? And it hit here, and it had resistance. Then it hit resistance again. Then it hit resistance again. Well, this is actually supposed to go up to here. Since it doesn't go up to there, we know that it's going to do what? Well, if it doesn't do what it's supposed to do, then what is it going to do? It's going to go the other direction. So that allows you to get into a short position from the top of the resistance. And guess what? Here's your moves again, right? Let's say you follow the pattern. Okay, so let me copy this real quick. Clone. Okay, so first move is it breaks support. Move number 1. When it breaks support, what do? You put a short order here on where it broke right there, see? Then from there, it comes back and touches that, and then goes on this huge short. See how that worked? So let's go back. Move number 1, break support. Move number 2, retest resistance. Move number 3, bada boom, bada bang, and there you go, a beautiful short. So if this seems hard for you to grasp, if this seems that you can't understand what I just showed you on how to follow a very simple 3-step pattern, right? Not candles, not support and resistance formations, not any of this. Just basically support and resistance, breakage up or down, 3 moves, boom, 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 how to enter on the retest. If this is hard for you to grasp, if this is hard for you to understand, then trading is something you should not do, because you're going to lose all your money and you'll never be good at it. This is the most easiest and fundamental way to trade, and it's exactly how you're supposed to trade. So this is the course that we teach called Trading 102. It takes all the stuff that you guys understand and you know, and it shows you how to actually execute how to do this. That's it. That's how to execute it. Boom, 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 and that's the trade. So that is the simplicity of this, guys. Nothing else. It is really that simple to do this, and that's just how it works, right? And there's consolidation. Here's a consolidation. There's the breakout. There's no retest, so we wouldn't get in that trade. But then it consolidates, and then you can see the push out, the breakout, and then you short again, right? The importance of understanding, and I'll show you what I mean. We just went through this up here. If you have a channel and you see that there's support and resistance here, right? And we have our support and resistance in this area here, right? And we look at this again. Here's another thing. We have a breakout, and like I said, the course will cover this more in depth, and we have one-on-ones to explain this for you. But here's a breakout. Your entry would be on the retesting of the where the breakout happened. It would be here. And then the next move would be to the upside. But notice that this actually never triggers this line here, see? It never touches that line again. Now, when it fails to come back down and break out, what happens is it starts to come back and it creates, so there was no retest here, right? See how it failed to retest? Now it's pushing up. Now it's showing another channel here, right? And this is where you guys you're misunderstanding what the charts are doing. You don't know when to realize that your trade is supposed to execute. When it doesn't, you have to cancel that trade out because now it's consolidating again, right? So when it fails to break out here and starts to consolidate in the zone, this creates another consolidation area right here, okay? That's the new consolidation area. This is a completely different trade. So now we're back in this scenario. So what we look for is a break of support. We look for the second move, right, which is here. Once it breaks support, it needs to go back up and it needs to retest in order to give you an entry. And then from there is where you would find a trade by following those steps. Now you got another trade that goes back into what you wanted, you see? It's that easy, guys. So, like I said, in the course, if this makes sense to you and you want to take this course, then the channel's VC Crypto Nation. All you have to do is send a Gmail to VC Crypto Nation, and you can take this course. So ask about it, see what it costs to get signed up, but this is how easy it is. Now, the beauty of this course is that it is so easy and so simple, and we know that everyone can do it, that we actually are the only people, and I'm the only person who does this, where when you follow the course and you do what the course says, and you go and do the goals and you basically actually do what you pay to do, we check up on you, we follow you, we teach and train you with one-on-ones. And if you follow all the rules and you just cannot get this, which would be really hard to do, but some people just can't, then we basically reimburse you for the course. Now, if you also follow the course and you execute these trades, we make sure that you make money in the trades. And at the end of the day, by becoming a successful trader and making money in trading and past the goals and the goals that we set for you, we then reimburse you for the course for being a successful trader. Because really what we want is people to basically say, hey, the course works and this is what I did. So by being an actual good student, you will get reimbursed for becoming a good student. So basically, if you are really terrible and you just shouldn't be in here, we'll probably weed you out early and not even let you take the course. But if you do take the course and follow all the instructions and become successful, we will actually reimburse you for doing the course correctly. You're not going to get that from anybody else. Doesn't matter who you have. So at the end of the day, guys, this is what we really come down to. And that's really what we focus on. So guys, if what I just went over in the entire platform of the 1, 2, 3, the rules of everything, at the end of the day, if this makes sense to you, then you should probably reach out to us for the course. If it doesn't make sense to you, then you should just give up trading. It is not for you. But other than that, guys, have a good day. Good luck. God bless. Learn to reach out to us. If you are in the U.S., check out the comments. You'll find the email, the website, and the